All right. Okay, we are in finally. My apologies. I had a quick. I had to. I wanted to restart my computer, recycle it every now and then, and at some point I had no option. So thank you very much for joining in. Hello everyone. Welcome to the FS3 Tokyo Open Live room. I want to say good evening to Mervin, Nas, John, Michele, IBY, Dion. Oh, we have Dale. Hi, Dale. If you are there, thanks for joining. Um, thanks for coming in. I owe everything to Dale. We have Desi, Kerry, Matthew, Aini, Scott, Parkmore 2016, Salar Todd, Nahalahala, Doug Pantelis. You will forgive my pronunciation of the name. Flash Trader, Jack Adinda, Rhonda Dutch, JM Pankhaus, Mr. Pankhaus, Mr. Pankai, Hi Pankai, and Pegasus. Thanks for joining in. Again, my apologies. I'll be very quick here. As you know, trading is very important in my trading. I think it should be important for any type of trading. Trading Forex and its derivative, futures, options, and CFDs and other instruments with retail off-exchange transactions involves substantial risk of loss and is not suitable for all investors. You may lose all of more your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative for future results. And I suggest you review the eventual risk disclosure on the website as well. The information included in this webinar are provided for general information only and educational purposes, of course. I, Giuseppe Basile, FibStalker Consulting Incorporated and FS will not be responsible for any losses incurred in investments made by attendees as a result of any information in this webinar. This is the standard disclaimer, and if you are watching the recording, you can stop the recording now and read the remaining of it. So let's dive right into the charts. As due to my fault, we lost a little bit of time here, but nothing that we cannot recover, and we're going to cover a lot of a lot of markets here. Just want to say hello to everybody. Thanks for joining in. That's me, and these are my charts. So thanks for joining in. All right, so I'll make those bigger. If you cannot or you don't see them well, move to 720 high definition on YouTube and it should be golden. So let's start from the SP500 here. And as you will remember, this market has been moving in extension now for some time. And today we saw, or I should say, this is tomorrow bar here, and probably you're going to see the start of a consolidation here. As we know, this market has been trading in extension, and that's my next trace there. Believe it or not, I believe that before or after, if we saw the highs here, this market is going to come back and try to check whether there is that participation. That is a counter trend move, so taking a short here is very, very risky. It's not something that I would recommend. You're trading against the daily and weeklies at this stage. If you take this short, of course, this short can well work as it worked in the past. For example, here, and it worked back. It worked back here, and so we know that this market eventually has to correct. That's not the way I use these traces. I use the opposite side. I mean, if and when the market tests this level, I want to use some of the techniques. Excuse me. Excuse me. Some of the techniques I use in my own trading, and I teach as well to test these levels. So again, hello, Todd. Thanks for giving me your justification there. Nas, do you have to register every day to join the webinar? I think it's good if you do. Pantelis, hi, Scott. Good evening, everyone. Thanks for joining in. Right, so this is not a short. If you have other techniques to short this market, or if you believe that in the short term this market is overdone here, you can short here and try to bring that level into 121. This is only a 20 points trade, and you're trading against the trend. All right, I want to take the opportunity here to review the dollar index. You know what I believe about the dollar index. The dollar index has been testing an important level for now some time. Oh, I forgot Marco there. Hi, Marco. So, you know, this market had a daily short that pushed price lower into on the daily here. And you know, I just choose those trend line for fun because if you know a little bit about my trading, you know that I don't use in my trading any. I don't make any reference to all tech analysis. I have another strategy that I use every now and then, mainly for uh, you know, just to double check and for demonstration purposes, and that's called the continuation style. And if you are interested, there is a series of webinars on FSRIT, that a series of 7 webinars. And when you follow that series, there is also the actual formal definition of the trading system that underlines the method. But let's focus on the dollar index here. This is the weekly. On the weekly, we can see this area of participation. The market has been moving laterally in this area for 2 to 3 weeks, and then eventually found participation. Where this market is moving, as we have mentioned, since a few weeks into 94.30. And trend lines for fun. That's the way I use them. I don't use trend lines, obviously, and I don't believe in them. And sometimes I just use them to highlight behavior of the market. For example, the market moving laterally or forming a coil or things like that. I can use the trend lines, but just to identify levels. And I don't want to seem misrespectful or disrespectful towards anyone. I believe that if you are able to make trend line work consistently, more power to you. And I'm very happy for you. From the bottom of my heart, and I just cannot make them work for me. At least I believe there are better ways to get good trading plans. And again, I don't want to seem disrespectful. I know that some of the things that I say might upset some people, but bear with me. You're kind of having fun here as well. It's kind of sometimes a comedy of price, but then you know that we can get very, very serious, and we know, and we get to understand very often in advance what are the areas that we want to get involved in. All right, so nothing happened really today in this market. This market had these 2 days lower here. It's correcting. And someone was seeing this a flag, and we already had a flag. We had a move lower here, a flag that lasted 3 days here, and then the market broken. Equal move from highs to lows, equal move. This could happen again, but we won't have a lot of space to go. Remember, 94.11 is the target of this participation shot. Is very close to that 94.35 as well. So be careful if you short this market. If you have any expectation about this market, just remove all your expectation you might have about any market, by the way, because the market, if there is one thing that the market is very capable of doing, it's basically zeroing all our expectation and assumptions. And I never do assumptions in the market. I mean, you might think that I assume that this is a strong level. This level has been tested 5 times. This will be the 6th time. After the 2nd time, this level has more significance, but it can fail at any time. And in fact, it went very, very close to failure back during August last year, when we got that washout in the in the stock markets, in the equity markets, and you can see that very, very clearly on the equity. And I believe, and also published, that was this week here, the week of the 25th, 28th here. And what happened, I believe, is that the Fed came in and saved this market. Now, note that in 1792, observer and acute observers will have noticed that this level has changed. It's not really the level that has changed, and before we were using 1797. And someone might ask, well, why is now 1792? Well, very simply because this is the continuous contract here, which is basically continuous price that is actually composed by there are different procedures to do that by putting one close to the other, all the contracts, and that's the reason why you see this level change. The level, the actual number changes, but the relative position of the low relative to the level never changes, and that's the most important thing for us. So I'm not, I don't care if this level now, the new contract is 1792. To me, it is important that that level has not been pierced, or has not been pierced just yet, because we don't know. All right, so dollar index, no assumptions there. Of course, if the market, there can be, I think this week or next week may be the week of the truth, if this market actually gets into this level and then bounces. The euro, that is the next market I want to review here, that is actually trading in close to highs here, might actually reverse. And someone might think that that has happened already, and this market is touching that 112.40. That was the 26 to 46 area that I mentioned yesterday, and we will see whether this market can actually bounce off this level and continue higher. And this continuation higher would bring price into a trace that is the best trace we could do after this disaster here. It actually skewed our charts, and particularly skewed the way my charts here. And as you can see, the second target is just above previous highs there. So if we get participation at this level, that's where we can get this market to move into two. And of course, again, there is a relation there with the dollar index, so that's something you want to have make sure you actually watch that. If you have any questions, as usual, I never shy away from answering questions. And if you have any questions on this market, so far we reviewed the SP 500 dollar index and the euro dollar here. So if you have any questions, just write them down. I'll be very happy to try and attempt to address them the best I can. Today, we actually looked at two trades, a short in the euro pound, which is still working here, and this is an interesting market. The euro pound, someone has asked me to review it yesterday, or I should say, sorry, last week. This market on Friday has tested for the third time that 78.76. There was participation on the downside. I think on Thursday there was already action. Indeed, it was it was actually on it was actually, yes, on so this is Monday, Tuesday, and this was on Thursday. And someone, I remember, asked me during the Tokyo session, we were here already, so that test had happened already in the morning, and particularly during the US, between the European and the US session. So during the morning European session, we got that participation. And if you think about it, right, it makes sense, because who controls the euro and the pound? Certainly it's not the Pacific area or the Asian area or the North American markets. And not only we know that 36% of the Forex volume is played in London alone, but also we are talking about here pairs that are completely, totally influenced by institutional and banks and commercial operations, as well as a little bit of speculation. They say that retail's actually speculation of Forex, retail Forex is 3.5%, which seems to be a lot to me. But this is a 6.2 trillion, because this is a 6.2 trillion market per day. These are the latest figure. I believe if we say 5.3 or 5.6 trillion, I think we are in the right ballpark there. So in the morning we actually traded the short here, and that short is still holding and moved this price lower. And just for those of you who are in the trade, and I know for sure that some of my students here are in this trade, there is a big potential for this market. It's not something that's going to happen overnight, but the shorts have been confirmed 3 times here. So if these eyes are not revisited, this market has offered a fairly trade already. All right, so I'm being asked to review the US dollar, Canadian, the US dollar, Australian dollar there. And this market has been technical, but definitely not easy to play. And we can review what happened on this larger time frame. Of course, I then repeat the analysis also on the smaller time frame. I use also other consideration in order to come with the setups. But usually this market participated to 71, and it actually moved well above the second target. And then we had another participation that came the day of the Fed here. So this market is correcting and is mildly correcting here. So I believe this market is actually trading a level here, which is a 4-hour level that could actually has the potential to keep pushing this market higher into 78.19. All right, so that's something that you want to keep an eye here. There is a whole area of potential participation. There are some shorts on the smaller time frame, and of course we never blindly buy these levels. We always test this level. The next level has to be tested here is 75.62, and this again could actually push this price higher into that 78. So that'll be an interesting trade for basically 230 pips here. So it's something that you don't want to overlook. And this market has the potential to move higher, and this market could actually move into 77.50 and even higher. So that scenario is actually in play, and it's possible for this market to move higher. So is there any other pair you want me to review here? Someone yesterday mentioned the triple bottom here. I should have rather use the Japanese yen in this workspace here. I think I picked the wrong one. In fact, user Japanese yen is this one. And there has been a reaction here today, but this market is still trading below the previous lows here, and into an area of potential participation short. So I'll be very, very careful in this market, and I personally do not believe in that triple bottom there. This market had all the opportunity to keep moving higher, but went to trade an extension short. So, and that level was tested twice and more. So this market had all the opportunity to move higher after that double test there. So I believe, and I might be wrong, but there would only be a better opportunity to short this market, because I believe this market is going to move into 170. That's my target there. So there's an extension in play here, and this extension 110. The question here is, 110.50. Do you believe it's significant? 110.50. I have no specific reason to believe that that level is significant. I don't see anything special about this level. And even when when we look at the smaller time frames, that suggests maybe 110.50. 110.50. Doesn't say anything to me. Now, see, these levels might say things to some people because they use specific indicators. They overimpose studies on price, and maybe you are seeing something in that area that I don't see. There are only two levels that are relevant for me, and I always mention them in the past: 118.40 and 116.30. The reason why I don't mention them now because if this market keeps moving lower, there's no business in trying to trade those to mention those levels. I think there is still a possibility if we get into those levels. I will test them for participation on the short side. So 117 does not have any significance to me, Todd. I'm sorry, but it doesn't mean that it might not be an important level. In my method, it has no importance. There may be other methods or other ways, respectful ways of looking at the market that in which that those levels might be important. The two levels that short term are important for me are 112.08 in this market, and I would actually consider the the recent highs to lows here as well important. If we move above 112.42, that's the next level I'm going to look at. And again, we can test and time these levels procedurally. So, and the objective is to get a fair trade. For any of you who do not know or understand what a risk-free trade is, it's a very simple concept. It's very simple, but widely overlooked. Basically, if you believe that you have a strong level that is important for you, a level of resistance or support, and you believe that the market has a big probability of reversing at that level, what you can do, you can work out a plan that actually allows you to enter at that level, being protected for any sideways movement, and then basically as the market moves in your direction, you can exit half of your position, and I call that risk-free trade. Now, when the market moves in your direction and let's say you have 1 unit of risk in gain, now if you exit half of your position, basically you end up having only half of your position to bring to target. But the magic is that if the market moves in the opposite direction and stops you out, you end up with a break-even plus cost of trading. Now, the benefit of this technique is that you never move your stop. So you don't trail, you just let the market do whatever it has to do. And this is a dilemma for a lot of traders and starting trader. And because they say, okay, but how big should I do my stop? Where should I start moving my trailing stop? You never think about these things. You never have these problems when you adopt a risk-free approach. Of course, a risk-free approach makes sense if you really know what you're doing. If you really have a strong level of support and resistance, you can trust it, and you know how to measure the current volatility in the market, or if you wish, you are capable of sizing your position in a way that reflects the current risk that there is in the market. When you learn all these techniques that are simple enough, I think you get an edge and a peace of mind that helps your confidence and helps your profitability on one side, but I believe it helps also your consistency. But when should we exit the second half? That's exactly the point. We should, if you have an entry level and you have a stop, let's say it's a long, so your stop is below your entry level. Okay, so that's your pip risk, the difference between your entry and your stop. And to that pip risk, let's say that pip risk represents 0.5% of your account or 1% of your account. You use that information to size your position. And I'll give all this information also in some webinars. So if you review my webinars, you'll get this information. Of course, I give all this information at greater detail also in the coaching program, but that's not the point, because you can find this information very easily online, and that's basic risk management. Now, so let's suppose that you sized your position in a way that if you enter and then the market goes against you and stops you out, you lose 1% of your account. Okay. Now, what happens on the other hand if the market moves in the direction of your trade? Let's say it moves 1 unit of risk in the direction of your trade, which means that now the difference between the price, the current price of the market and the stop, it's 2 times your initial risk. When that happens, if you exit half of the position, and that's the point where, and the price where you have to exit half of the position, you end up carrying only half of the position now, but you took half percent of gain. And if the market, and without moving your stop, if the market does whatever it has to do and then eventually stops you out, you end up with plus 0.5% that you took as a partial profits before, minus 0.5% that you lose because your second half hits the stop, plus cost of trading and slippage. And when you do that, this is a very powerful technique. There are other, risk and reduced risk and risk-free type of trades. But this is, this is a simple one. There are others that are even more powerful than this. But the point is, the main idea is that people never think about that because they have to renounce to bigger gains because they have to cut their position in half. They don't understand that this market is all about, and this business is all about risk management. It's not about, it's not about maximizing gains. It's about reducing risks. And the reason for that, and some people might disagree, but the people who disagree, they never, I believe, understood the real nature of the market. Because if there is one characteristic of the market, is that the market can do anything. And I'm going to write it for you here so that this is going to be hopefully transforming experience if needs to be. And if you already know this, you might not be convicted about it. And you really need to be convicted about this simple sentence. It has to believe, this has to become your main belief in trading. And of course, this is my suggestion here. You are obviously free, and more than me, you are free to choose however you want to play the game. But what I'm telling you here is that I believe that if you really make yours this principle of the market, this principle about the market, you will need to do a mind shift that would actually put you in a totally different path when it comes to analyzing price and trading the market. Indeed, I spent a considerable time in my trading research to actually have match my trading edge and my method to this principle. Because at some point I started asking myself, okay, I believe this is true. The market has shown me plenty, that this is true. This is a belief that would help my trading, not be detrimental to my trading. But how do I practically now um, I practically now deal with a market that can do anything. What should I do? I mean, how should I size my position, take my position, manage my risk, and so on, time, in order to respect this fundamental thing? How can I deal with something that can do anything? And with time, a number of answers came, and one of that, and it took time to me. It took years to me. One of those answers was, I can only trade using a risk-free approach. And and again, the main fight you're gonna have, let me tell you, the main fight you're gonna have, it's against your sentiment of greed. And I didn't say greed, but I didn't say greedy, but I said a sentiment of greed, because I don't believe you are greedy. None of us is greedy. I believe when we trade, we have sentiment of greed, and this sentiment of greed actually push us towards certain kind of decisions that are not conducive to successful trading. So this seems a lot of theory here, but the reality is that then with time you have to either learn or discover techniques that allow you to deal with this fundamental truth of the market. The market can do anything. So I will keep saying that. I will keep talking a lot about risk management in this show. I know that at some point you will say, "Oh, these guys! I mean, this guy's so repetitive. I mean, let's speak markets. I mean, again, I mean, all the time with this peep talk on risk management." Well, I really believe that that's mind shifting, life changing kind of belief. If you hold on that belief, your trading is going to change completely, but also your loss is going to change completely, and you will soon discover that you're going to have much less losses. And when you have the market that works in your direction, you're going to in a position where you can take full advantage of it, even with a small position. Because see, when you cut in half, we also have to say that when you cut in half and you are timing on the daily time frame, of course, cutting in half, means reducing a small position even more, right? But when you're timing, let's say you can take 10 pips risk, you can take 7 pips risk, 5 pip risk. I mean, 5 pip risk, it's really impossible, only for the fact that you have to take into account the spread, right? I factor the spread into my pip risk. But if you, I mean, to me, it took months, if not years, to learn this lesson here. And I believe that if you really internalize that lesson, and that does not come alone. In fact, as you know, yesterday I've launched my May session. It's the 4th session of a very successful program. I mean, I have to say that when I started, I didn't expect the results that I had. With everything I do in trading, I always tell myself I won't start something if I cannot make a difference for people, because there is so much noise around. Let's face it, right? I mean, there's so much noise. There's so many methodologies, so many things that you have to test everything, of course. But I also see a lot of things that at least do not work for me, and the approach I propose might not work for you as well. The point is, there's a lot of noise around, and I thought, I want to try to offer something different. And when we deal with the part of the coaching program related to profitability and consistency, we actually analyze something like 120, and now grew to 160 different beliefs about the market, and you have to. And I propose an exercise that initially a lot of people skip, and then they understand it's the most important exercise they can do, and how they relate to that, to those beliefs about the market. Very, very important exercise. And I have a tracker that I distribute to people, to students, to guide them through a certain path so that they develop the right beliefs about price. And if you believe that that's not important, well, you will discover it is. All right, so let's make a time check here. I went a little bit longer because I started a little bit later. I like to kind of mix a price analysis with actual, opportunity to teach some of the important concepts. And so you will forgive me if I indulged a little bit into the concept of risk management, risk-free trades, as well as fundamental principle of the market and the way you trade the market. And actually, I always like to quote a famous statement from Van Tarp, which has been one of my mentors. He always says, and he still says it, we don't trade the market, we trade our beliefs about the market. We don't trade price, we trade beliefs about price. And let me give you the proof. Before Todd has asked me, Giuseppe, what do you think about 110.50? Is that significant for the pound, for the Japanese yen? Or what about 117? And see, can you see it? Can you see it? We tend to look things in price which reflect our beliefs about price. Now, I don't know the real reason why Todd has asked that, and I'm not picking on Todd necessarily. I'm actually, not at all. I'm actually using that as an example. But probably Todd has indicators or anything on the chart that actually is suggesting him. It might be a moving average, it might be a Bollinger Band, it might be a channel, I don't know, it might be even a trend line, a funny trend line. I don't know. And I'm not saying that that's wrong. I'm just saying that Todd is looking at price with the Google of his understanding and the tools that he uses. And this is a good example, Todd. So the same way we look at price through our beliefs, what we believe works on price. You know my beliefs. My beliefs is that there is participation of algorithms basically on all prices, including Forex, believe it or not. Some people believe that because that market is fragmented, there cannot be algos working on it. Well, I would have some doubt about that, and my students too. All right, so let's start a summary, a recap right here. I hope Todd won't want me. I used Todd only Todd expression there only as an example. So we actually started by reviewing the SP 500. We say that this market is in a potential, could have started a retrace, which is only an intraday retrace of 20 points into 2021. If that happens, we're going to test that level and see if we're going to get a continuation higher. And this continuation higher could be for 21 to 2073. So we go 50 pips, 50 points to 50 points here. We also mentioned the dollar index, and we say that this week could be the week of the truth of or next week, as well as this market could test and show its end at 94.35, 94.30. If that happens, we will see whether this market retraces or bounces. There are only two possibilities there. If continues lower and traces lower, I mean, you can kiss goodbye to this 94 area, and you're going to see much lower prices in the dollar index. These seem to be aligned with what's going on in the euro dollar, because the euro dollar is pushing higher, although at the moment is actually correcting into potential area of continuation higher at that 12.38. We're also seeing shorts here at previous highs. Typically, previous highs are or broken, or there is some participation and profit taking of price getting into those areas. So we will see what happens here if this market breaks, continues higher. That could be into, 114, 130, 90, 113, 90, as we mentioned in the last few days. And then we reviewed a trade which is still doing very well, a trade that we took in the morning here. I also took US dollar Canadian dollar short here, and that market actually has offered a finish trade and then stopped out. This is a good example of what it means to have a risk-free trade here. If you get a risk-free trade here, and then the market stops you out, right? You exit half of it, and then when you're stopped out, you lose half of it, and you only pay the cost of trading. So that's very, very important. All right. So if you understand that concept, I think you'll do very, very well. And then we reviewed the Australian dollar, US dollar. We have seen that this market could be retesting the 75.62. We will see how it behaves there. And very briefly, we reviewed the US dollar Japanese yen, which is moving higher here. Is this a triple top? I said, yeah, a triple bottom here. I said yes yesterday, no. We'll see where this market stops, and there is a potential for a continuation, I believe a continuation lower. If not, that's a gift of the market, because one of those two levels, 118.40 or 116.30, could come into play. All right. And this is everything for today. I hope you appreciated and liked the show. Nasi saying Australian dollar, US dollar is approaching 75.55. Seems attractive, yes, but you have to have a mechanism to time it and to know when the smaller time frame has completed the push lower. So you can see here also on the daily we have, just let me remove the previous. Also on the daily, we have a setup that is pushing potentially price much lower than that level. So we have to have a mechanism to study the smaller time frame to see when the sequence on a smaller time frame fails. I call that FibStalker time. It's one of the things that I teach in the coaching program. Okay, so be very careful. Mind the risk always. That's the first thing. If you liked the show, please tweet about it. Let your buddies know. If you are on forums, share it. Let's have the show grow, so we can have more participation. It's a benefit for all of us. And if you actually are interested in the coaching program that I will start. That's the May session, but the coaching program starts before, because I let student some time to actually study the first part of the material. Then I start 15 webinars of 2+ hours where we review all the concept and I answer all the questions you might have, and we apply the concept to charts. And I've launched actually my May session yesterday. So if you are interested and if you join, I'm gonna give access to the FibStalker room as well. So if you are interested, just let me know, and I can give you additional information. All right. So thanks a lot for joining in. I hope this was interesting. If you like the show, just let people know, and let's have some fun. All right. So thanks a lot, and have a great day. So have a good evening, day, and afternoon. Nas, Todd, Mervin, John, Michele, Pancai, IBY, Dion, the great Dale, hi Dale, Desi, FX Street, Admin, Kerry, Marco, Matthew, Aini, Scott, Pegasus, Salar, Hahala, Doug, Flush, Trader, Jack, Arinda, Ron the Dutch, JM, Lee Bobbitt. Thanks a lot for being in. You're growing. It's a pleasure to have you in. If you have any questions, remember, never shy away from trying to offer are answered based on the way I look at the market. All right, so thanks a lot for joining, and I will see you tomorrow, same time, 6 p.m. All right, bye-bye now.